those signs of the oil glut continuing.
Yeah, and with Saudi Arabia cutting 50 cents a barrel to Asia with, let's check out the charts, 5-month lows for West Texas Intermediate and Brent crude. And you have to remember that Brent crude was within striking distance of $100 a barrel just a month or two ago. This is a big downward turn, and a lot of this has to do with outside OPEC supply that has exceeded all estimates. And chief among the exporters is the U.S., which is even a surprise to many in the U.S. Exports of U.S. crude are now nearing a record of 6 million barrels. This is flooding the market with oil and weighing on prices from Europe to Asia. We've got two market trackers and Macquarie both giving estimates of between 5.7 million and 5.9 million barrels a day just for last week alone. And again, this is to be confirmed when we get the Wednesday data from the U.S. government. But the flood of exports coming as domestic production in the U.S. is surging to a record above 13 million barrels a day. So while OPEC and its allies have agreed to deepen those output cuts to balance the market, the non-output suppliers really driving the prices lower. You've got a major bearish factor that continues to weigh on the market at this point.
Meanwhile, Russia says OPEC Plus cuts can go further. It looks like Putin himself is getting involved.
Yeah, Deputy Prime Minister Alexander Novak of Russia saying that OPEC Plus can go further with cuts if needed, meaning if prices continue to fall. And he'll be joining Vladimir Putin this week on a visit to the United Arab Emirates. That's Putin there just over a year and a half ago, visiting the president of the UAE and also Saudi Arabia. And this overseas trip, which is rare for the Russian leader, especially since the invasion of Ukraine, is expected to bolster partnerships among the key members of the OPEC cartel.